Ladies and gentlemen, Greg McCloskey from ForexLive.com. I'm going to take a look at the euro versus US dollar as we work toward the close of the current week and look forward to next week's trading. Let's start by taking a look at the daily chart. And if we look at the daily chart, what was in play this week was the 50% retracement. I'm going to start with that. That level comes in at 1.0942. And that is of the move down from this high going all the way back to this day right here. This is the January of 2021 to the low price that we saw in 2022. The 50% midpoint comes in at 1.09420. And you can see that in trading this week, if I were to zoom in, the price did move below that 50% retracement, but it could not sustain the momentum. And today we're seeing a big rebound to the upside, moving toward our highs for the week, as a matter of fact, but definitely away from that 50% retracement. The other thing off of this daily chart is this blue line. Now, this blue line is the 100-day moving average, and it held support in the month of July, and the price moved higher. And in trading this week on both Wednesday and Thursday, what did the price do? It came down to test that 100-day moving average, and guess what? Found support again. So we've had the last three tests of the 100-day moving average find support buyers against it and push to the upside. That's more bullish. That keeps the buyers in play above the 50%, above the 100-day moving average. So off the daily chart, longer term chart, the bias is more positive going into the new trading week. Now, on the hourly chart, this story tells a little bit of a different story from a technical perspective. We look at the range most recently from the July 19 high to the low rate we saw this week. The price has been trending more to the downside. Now, here's our low buyers against the 100-day moving average on Wednesday and both Thursday, and we had two instances where the price came down to the 100-day moving average on Thursday, and each of the time, although we dipped a little bit below it here by a few pips, the price bounced higher and bounced higher in trading here today. We saw the continuation to the upside, or more momentum to the upside, and that's taken the price to the high price, or toward the high price that we saw on Monday, and also this high price that we saw on Friday of last week, this corrective high price. Now, in the process, the price did move back above the 100-hour moving average in the short term. That's this blue line, and then the 200-hour moving average. And of note also is how the low price off of this break right here did find support against the 200-hour moving average right here. So that kept the buyers in the short term more in play and in control. The one thing that they didn't do so far is get above the 38.2% retracement of this trend move down from this high right here to this low right here. That's a minimum retracement that I look for in a corrective move more of a trend move to the downside. If the price can't get above the 38.2% retracement, the buyers aren't really winning. This is more of a plain vanilla correction in what was a more of a trend move to the downside. Now, there's still time, and there's still, we haven't really moved back to the downside. We haven't moved back below the 200-hour moving average. So the buyers are still in play and looking to break above that 38.2% retracement. If they can do that, then this bias in the short term would also turn more to the upside, and we look for more momentum in that direction with the 50% retracement as a target level, maybe the high price that we saw in trading last week, which, by the way, stalled against the 200-hour moving average here before moving to the downside. That would be another key target. It also was a high price going through here, and even back here, right here. So that's going to be a key level in trading next week. Earmark this level 111.48. If the price should move higher in trading next week, it might be a target for the trading week if the buyers can take more control. On the downside, it would take a move below the 200-hour moving average and the 100-hour moving average to hurt the bias, and then we'd have traders looking toward the 100-day moving average once again, and we'll see if the fourth time is the charm in that situation. But right now, the buyers are more in control on the daily chart. The buyers are trying to take more control on the hourly chart. Let's get above the 38.2% retracement. We can say that they are taking back more control from the sellers. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.